Morgan Stanley says MSBT had the best first trading day of any ETF it has launched. Morgan Stanley's head of digital assets said the firm's new spot Bitcoin ETF had the best first trading day of any ETF the bank has ever launched, according to a Cointelegraph report on April 10th. The Morgan Stanley Bitcoin Trust, MSBT, which began trading on NYSE Arca on April 8th, pulled in approximately $34 million in net inflows on its debut. With 1.6 million shares changing hands and roughly 430 BTC acquired for the fund's holdings. That $34 million figure may look modest next to the billions that BlackRock's IBIT attracted in January 2024. But Bloomberg senior ETF analyst Eric Balchunas put MSBT in the top 1% of all ETF launches over the past year, noting that most newly launched ETFs average $1 million or less on their first day. His first-year AUM projection for the fund? $5 billion. The day everyone else bled MSBT's debut is more striking in context. On April 8th, the broader U.S. spot Bitcoin ETF sector recorded $124 million in net outflows. Only two funds posted positive inflows that day: BlackRock's IBIT and Morgan Stanley's MSBT. Every other spot Bitcoin ETF saw redemptions. That divergence says something about who is buying. IBIT benefits from its first-mover scale and $55 billion in AUM. MSBT benefits from something different: a captive distribution channel of 16,000 financial advisors managing $9.3 trillion in client assets. When advisors can recommend a proprietary product with the lowest fee in the category, the flow mechanics change. The revenue stays internal, compliance is simpler, and the reporting plugs directly into Morgan Stanley's existing systems. At 0.14% annually, MSBT undercuts every competitor. BlackRock's IBIT charges 0.25%. Fidelity's FBTC charges 0.25%. Grayscale's Bitcoin Mini Trust charges 0.15%. On a $1 million position, the difference between MSBT and IBIT is 1 on 100 per year. That compounds. The pipeline behind the fund. Morgan Stanley's executives indicated more crypto products are in the pipeline. The MSBT launch is the visible piece of a broader infrastructure build-out that the bank has been constructing for months. In January 2026, Morgan Stanley filed S-1 registrations for both an Ethereum trust and a Solana trust. Neither has received approval yet, but the filings signal that MSBT was always intended as the first product in a suite, not a standalone experiment. The bank is also pursuing an OCC National Trust Bank charter through a proposed entity called Morgan Stanley Digital Trust National Association. That charter would cover digital asset custody, fiduciary staking, and token transfers, giving Morgan Stanley the ability to hold client crypto directly rather than relying on third-party custodians. Right now, MSBT uses Coinbase Custody Trust Company for cold storage and BNY Mellon for cash administration. Both Morgan Stanley and Coinbase are simultaneously applying for national trust charters, which suggests this custody arrangement is a bridge, not a destination. Then there is E-Trade. Morgan Stanley plans to offer retail spot crypto trading for Bitcoin, Ethereum, and Solana through E-Trade in the first half of 2026, using Zero Hash as its liquidity and settlement layer. That would give Morgan Stanley's brokerage clients direct spot exposure alongside the ETF wrapper, covering both the advisory channel and the self-directed channel in one move. Where MSBT fits in the ETF landscape, the U.S. spot Bitcoin ETF market holds approximately $100 billion in cumulative AUM as of April 2026. BlackRock's IBIT accounts for more than half of that. Fidelity's FBTC holds a distant second position. The remaining dozen-plus funds split the rest. MSBT will not catch IBIT on assets anytime soon. But Balchunas called the debut arguably the biggest Bitcoin ETF launch since they began, referring not to the raw dollar amount, but to the structural significance. This is the first time a major U.S. bank has issued its own spot Bitcoin fund, rather than distributing someone else's. When J.P. Morgan advisors recommend IBIT, BlackRock earns the management fee. When Morgan Stanley advisors recommend MSBT, Morgan Stanley earns it. Amy Oldenburg, Morgan Stanley's head of digital asset strategy, said in the firm's official announcement, Digital assets are increasingly intersecting with traditional markets, and our focus is on helping clients access that evolution through structures they understand and trust. A Coinbase institutional executive characterized MSBT as the clear response to this second wave of digital asset adoption. Market snapshot BTC traded at 72,348 as of April 10, 2026, up 2.2% over the previous 24 hours and 8.7% over the past week. ETH sat at 2,203, 1.3%, SOL at 8350, 1.9%. The Fear and Greed Index read 47 in neutral territory, a meaningful shift from the 33 fear reading on the day MSBT launched 2 days earlier. The macro backdrop has improved. A confirmed U.S.-Iran ceasefire sent oil prices down 14% and pushed Bitcoin back above $72,000. Whether that momentum sustains or fades, Morgan Stanley's $34 million day one haul happened during a period when every other Bitcoin ETF was losing money.